All right, well, good afternoon, everybody, and welcome back to another episode of Walks and Wall Street. It is September 18th, 2022. It is a Sunday night. So obviously every Sunday night we do our Markets a Look Ahead live stream, and this is going to be an action-packed week on Wall Street. We have everything from corporate earnings from FedEx to Costco, to major housing data, to the big topic for tonight, which is going to be that FOMC meeting, when we will be hearing from the Federal Reserve and Jerome Powell himself as he sets the tone, sets the course for monetary policy in relation to raising interest rates. We're gonna be talking about that tonight. But for right now, if we look at S&P 500 E-mini futures, we're actually up fractionally across the board. Let me take a look here at the NQ, which is the NASDAQ 100. It appears that we are also in the green fractionally. And then the ticker symbol YM, which is the Dow Jones Industrial Average Futures, we are also in the green. Now, we did talk about how we had a painstaking sell-off on Wall Street last week, but the good news is that there was some significant buying volume into the close, which I think should carry over into Monday. However, once we have that FOMC meeting, which is slated for the 21st, which should be Wednesday, I think we could expect some volatility here. Now, we talked about the hotter than expected CPI report, the CPI numbers. That headline actually did come in a little bit light, but the most important thing that we like to talk about is that core CPI number, which actually rose more than expected, which signals to the economy and the markets that inflation is becoming a little bit more sticky than we would like. We'll also talk about some major cybersecurity hacks and attacks that have happened last week rolling over into this week. But first, team, let me put down my computer, my laptop, put away all my stuff, and we will get started shortly. We are starting the stream off from Williamsburg, Brooklyn tonight at the gorgeous WeWork office. And hopefully tonight that we don't get lost. So allow me a minute. All right, but more importantly, let's see who we have in the chat. So this is the main lobby of the WeWork office here in Williamsburg. It's beautiful. I trust you guys had a phenomenal weekend. Hopefully you're well rested for the very busy week ahead. We're gonna be covering a lot. We will also be doing some business travel, so we may not have a live stream on Monday or on Tuesday or Wednesday, so just be cognizant of that. Let's see who we have in the chat. I see Matthew P. says hello, Tom. Paul Greenwell, GX72. Kathy Lyons, good to see you. I'll show you guys a little bit of the WeWork office here. I think this is actually one of my favorites now. You have a nice kitchen over here. Pretty nice workspace. Now, there is a lot of people working here on the weekend, so maybe we'll save the tour for another night. But allow me just to get down. Stream. Tomas, good to see you, Chris. Welcome, welcome. War Walker, always a pleasure. All right, just let me get out of here. All right. That's a lot better. So we're gonna be walking over the Williamsburg Bridge. And if you remember the debacle from yesterday, hopefully we don't get lost today. We had some difficulties finding the walking bridge, but I think tonight we should have a little bit better time, a little bit better go about it. I see Chris is here. What's up, Chris? Sally, Dusty, Cole. Trust you guys are well. So we're gonna be making a left on Berry Street. I spent the majority of the day in Greenpoint, Brooklyn, where I used to live. Let's see who else we have. I want to make sure I didn't miss anybody. GX72, Love is here, says hello. Jeremy Masters says hey, Tom and everybody. James V says hello. Daryl, welcome. Good to see you. Mike C, Lilla, says, hey, Tom and everybody, Matthew P, FredX, C Burgers here, Jewel Mar, NMB 045. Says, wishing you a great week ahead, Tom. Wishing you a great week ahead as well, NMB 045. Hopefully you are well rested and ready to attack the week ahead. Ethan R says, hello, everybody. What's up, Ethan R? Jose Mendez says, hey, Tom, it's my first time chatting on here. Well, welcome to the show. Welcome to the party. Thank you for joining. And I trust you're having a fantastic Sunday night. So we are in Williamsburg, Brooklyn. I'll give you guys a little bit of a view of the beautiful Williamsburg. A lot of outdoor dining, a lot of bars and restaurants. Billy says, happy Monday, Junior. Touche, my friend. Cindy Foley says, hey, Tom. Golden's Dawn says, hey, Tom, nice office. Looking forward to going over the bridge again tonight. Yeah, that's assuming if we can find the bridge. Hopefully we'll have a little bit better go about it tonight, which I'm sure we will. Kevin says, hey, terrific stream. Good to see you, Kevin. Vinny Castellano from Staten Island says, hey, Tom, at the age of 52, I just got accepted to Penn State for my master's degree. Oh my gosh, talk about starting off the stream on a positive note. Vinny, congratulations on your success, my friend. And please keep us updated as you go along. So are you gonna be, I'm assuming you're gonna be doing this online, right? Or is it something that requires in person? But that's fantastic. That's awesome. So obviously tonight is Sunday, which means we will be doing the Markets a Look Ahead live stream where we will be talking about all of the major events and economic activity that'll be coming out this week on Wall Street. Now, I will like to set the precedent that all eyes are going to be on Wednesday. Okay, that is September 21st, and that is when we will be hearing from the FOMC. That is the conclusion of the Federal Open Market Committee's meeting, in which case Fed Chair Jerome Powell will be making his decision on monetary policy. However, next week we're not only going to hear from the Fed, we are going to hear from another central bank around the world, the Bank of Japan, or the BOJ. And it's interesting because we've been talking about this for a while, and the Bank of Japan has set a very, very different precedent than the Federal Reserve, okay? And I would even argue all central banks around the world. And if you look at the comparisons and the contrast between monetary policy, Bank of Japan is absolutely taking a completely different approach. Full 180, as I should say. And the Bank of Japan is actually going to hold interest rates near zero still, and actually practice in negative interest rates. And I think this has exacerbated their currency crisis, because I believe the Japanese currency is now at the lowest level against the dollar ever. And this is the way the market is sort of signaling to the Bank of Japan, like, look, if you are going to continue to be lax on monetary policy, if you're going to continue to print into oblivion, well, why would we want to hoard yen currency where the central bank is actually tightening monetary conditions? So we'll keep our eye on that. We'll talk about that a little bit later, but I think the overarching theme for next week is all eyes are going to be on the Fed. Now, consensus used to be that we should be getting a 50 basis point rate hike. However, after the egregious inflation number that we got, in terms of core CPI, we're probably 100% going to get a 75 basis point rate hike, with the upside about a 30% chance. Futures traders are actually pricing in about a 30% chance we may get a 100 basis point rate hike, which would be a full percentage point. So we will we'll keep our eye on that. Marcelo says, I love New York City even though I've never been there. What's up, Marcelo? Good to see you. Mike C is here. This is Japan in for a pound, I suppose as well. Good to see you, Mike. Hey, Jumar, good to see you. Mariana says hi. Marcelo says greetings from Brazil. Dusty Cole, good to see you. Now, we have a couple more blocks until we get to the Williamsburg Bridge. We are going to be walking over the Williamsburg Bridge today and up towards Penn Station, Pennsylvania Station, where we will end the stream. Jose Mendez says AK was in Brooklyn, but he didn't mention Washington Park as home to the Brooklyn Dodgers. All right. Very nice. Denise Ebby says, I know the way. The world is. Good to see you. Now, let me know if you guys hear any wind in the microphone, because we still don't have our mic, and it's going to be quite the windy night, so we may have to just battle some wind noise here. Vinny Castellano says, I am a history major, Tom. That's awesome. You know, Ray Dalio, one of the most successful, I guess you could argue the most successful hedge fund manager on the planet, built Bridgewater Associates from the ground up. It is the largest active hedge fund now in the world. He usually says, well, one of the things that he says is, some of the greatest investors are the best students of history. And Ray Dalio actually wrote a book which I would recommend to everybody in the chat, called Principles. And essentially Principles details and outlines business cycles and different things that have happened throughout history as it relates to the business cycle, so you can sort of pick up some commonalities between the history of the past and today to try to predict and forecast financial markets. Ooh, I think we got the light so we can cross over. Hey, Austin City Limits is joining us tonight. Good to see you, Austin. Trust you're well. Here now. Good to see you here now. Now we'll dive into our topics in just a minute. I just want to make sure we focus on going over the bridge so we don't have that hiatus as we had last night, which was hilarious, by the way. You know, just to give you some perspective of just how the neighborhood has changed. Look at this house here, right? This looks like your run-of-the-mill single-family home that you would almost see on Long Island. And this is one of the only last standing houses on this block. And then look across the street. You have all of these brand new multi-family apartment units. And it just goes to show how fast these neighborhoods change and get gentrified and things like that. You know, if you take a walk in Greenpoint all the way down to Williamsburg, you'll notice there's a lot of luxury apartment buildings here, many of which that are rather expensive too. We'll wait till this guy crosses here. But this is Berry Street. Hey, Jamie Price says, good evening, Tom. Have you ever thought about doing the Roosevelt tram for a live stream? Yeah, so I definitely have thought about it. And we actually may do that one day. So I guess it's in the cards, to be determined. Now, I would probably want to do that before it gets too cold out. So we'll do it. So we are approaching Peter Luger's Steakhouse here. I'll show you guys. One of my favorite steakhouses. Yeah, Lila says it's really sad to see. Well, I think a lot of people have mixed feelings about it because, you know, on one hand, when you have new investment into the community, what it'll usually do is, you know, drive crime down, education gets better, and the like. But I also understand that the original people, I'll show you guys Peter Luger's. The original people that, lived here are unfortunately getting pushed out because you have all of these brand new, multi-family luxury buildings. Some of them have really state-of-the-art gyms and things like that. So it's sort of like a double-edged sword. On one hand, you don't want the locals to be pushed out, but then on the other hand, it's like you sort of want the city to progress and evolve. So it's difficult. Hey, Jewel Mar, thank you so much for the $10 donation. You are way too kind. Says, appreciate you, Tom. You have a great conversationalist, or you're a great conversationalist covering the day-to-day on all things. Thank you so much, Jewel Mar. I appreciate you very much. Check out this place. Top quality meats and prepared foods. Appreciate it, Jewel Mar. Thank you for the donation. We're also going to get some housing data coming out. Oh, this is a ping pong place. Look at this. I guess you could come here just to play ping pong. Always really unique places here. So we are going to get some housing data. Tomorrow, we're going to hear from the National Association of Home Builders as they release their housing market index for September. Now, many economists on the street are forecasting about a 48.5 reading. That would be about even with August data. However, the index has fallen every single month this year. And in August, it breached its key break-even point of about 50. So usually, when you have a reading of 50 or more, it signals growth. But a reading below 50, it signals contraction. But oftentimes, I believe, and I argue, and you guys sort of know my stance here, that a lot of people don't really know how to interpret these readings, especially as it relates to the Institute for Supply Management. Just give me a second. Especially as it relates to the ISM PMI numbers, which is the Purchasing Managers Index. And I think the main reason for that is because you really need to look for deceleration in these numbers. If you just look at the numbers at face value and don't really interpret them, well, an example I like to give, so this is Bedford Avenue, by the way, we're about to turn on the bridge, but an example that I give is, if you look back to the latter part of 2021, we had our PMI numbers right at about, I think, 65 to 68. And then every single month from that point on, those PMIs started to roll over, right? So it started to go 58, then 68, then 65, 62, and then in the 50s. Now, although that does signal growth in the manufacturing sector of the economy, the problem is if you just read it at face value and say, oh, if the number's over 50, then we're good to go, you're not going to get the full story. So you need to look for deceleration in those numbers. And usually as the PMI goes, you're sort of looking at the business cycle in real time, right? So as those PMI numbers start to roll over, so did the S&P 500 and the NASDAQ, as well as the Dow Jones Industrial Average. All right, so we made it on our first go about it. We are now entering the walking path on the Williamsburg Bridge, and we will be, I guess you can consider it commuting all the way back to Penn Station. Gary Carpenter here, good to see you. War Walker, welcome. The LT Prod. Hey, Big Talk, says Tom, what's the average rent in New York City? Well, I think the average rent on the island of Manhattan is about $5,000 right now. But I don't think that tells the whole story, because when you look at the average, especially in a city like New York, you can get what you called skewed data. So the data becomes very skewed. And that's because Manhattan is a very diverse place. So you could be in Manhattan on Billionaires Row, looking at apartments that you could rent for $45,000 to $80,000 a month. But then you could be in other parts of Manhattan, like Harlem, Hamilton Heights, East Harlem, and you can get a pretty decent apartment for, $2,000, give or take around there. So I think it's better to look at the median prices, but even those are still elevated. Big Talk says 5K is crazy. Agreed. Hey, Raphael, thank you so much for the 50 real. Raphael says thank you for the great content. Thank you, Raphael, for the support. It is very much appreciated. Hey, Kings9966 says wonderful show as usual, very informative too. I learned so much. Well, I appreciate that. We are going over the Williamsburg Bridge today. So one other thing I wanted to mention, tomorrow, AutoZone will report earnings. Now, a lot of the auto parts stores that are publicly traded have actually been doing very, very well at growing their earnings and growing their revenues. And the reason for that is because if you look at the broader-based health of the US consumer, what you'll see is that the middle class to lower class Americans, they tend to be a little bit cash strapped. However, they do have the money to repair their existing vehicles. So what we've been seeing is new car sales have actually been down, and people are trying to squeeze as much life out of their old vehicles as they can. And this has been really, really making a positive impact on those auto parts stores. Oh, here's the subway going over. So we'll touch on that tomorrow. So AutoZone will be reporting their fourth quarter fiscal 2022 results. Yeah, let me give you guys a shot of the One World Trade Center from up here. I think the grades are too small. Hey, Big Picks says AutoZone is great. So I wanted to share something with all of you. There was a very, very good article this weekend in the Wall Street Journal as it pertains to Rivian, so an EV maker of Rivian. And I think the article was very educational in the sense that Tesla has been very disruptive in the industry, right? Because their go-to-market sales strategy is very, very different than like a Ford, a GM, or anybody else. And the reason for this is because Ford, GM, and all the other automakers are not allowed to sell direct to consumer. However, Tesla, they are allowed to sell direct to consumer. So if you want to learn a little bit more about why it's so lucrative and advantageous for a lot of these EV, and you'll see a lot of these EV companies investing millions of dollars into lobbying state and local governments to be allowed to sell direct to consumer so they don't have to get into dealerships involved. Wow, check this out. If you look all the way in the distance, you can see Midtown Manhattan, the Empire State Building, and the like. So anyway, what I was saying is, right now in the United States, and I think there is a place for car dealerships, right? But if I had to wager any money, I would say that the industry of car dealerships is going to be absolutely disrupted within the next 5 to 10 years. It's coming. It's coming. Now, I understand the value of a traditional auto dealership, right? Because they can provide independent financing at competitive rates. They can provide warranties for these specific vehicles. In addition to the competitive financing and the warranties, they can do service centers and the like. So companies like Tesla and Rivian are trying to cut out these middlemen and just sell direct to consumer. You know, in an ever-changing world of e-commerce, I think you're going to start to see that happening, but it's going to take tons of money in lobbying to be able to push for this. So what Rivian wants to do is open up their own corporate-owned stores. But the way the laws are right now, they will not be able to sell direct to consumer in many states. Yes, so Big Pick makes a very good point. It says, hey Tom, if dealerships fade away, what will happen to the loan side of the auto sales? And that's a very good point. So I think what you'll start to see is a lot of these companies like Tesla start to do self-financing, right? And maybe partner with third parties or online auto brokers and things like that. But I think a lot of that stuff will be internalized. Now, I forget the name of the article exactly, but if you type in the Wall Street Journal, something along the lines of Rivian, it's the cover story of the Wall Street Journal this week. And obviously, I have a tech background, right? So I'm not too knowledgeable on the whole auto sales hierarchy. So this was a very, very eye-opening and educational piece. Now, they actually interviewed the former head lobbyist for Tesla, which he is now the head lobbyist at Rivian. And what we're seeing right now is a lot of abrasiveness from state governments. But we saw this at the turn of every sort of major disruptive period. So I think those who fight this, I don't think they're going to have a very good time down the line. That's just my two thoughts. Hey, Monster Mix says, hey Tom, what bridge are you walking over? We are walking over the Williamsburg Bridge, and it is very windy and cold. So let me know if you guys hear any wind noise in the microphone. I do apologize for that. Hey, Sabrina Ferris here. What's up, Sabrina? Dan Zang says, Tom, have you seen the Hummer EV? That thing looks so sick. So I have seen it. It does look pretty cool. I would agree. Good to see you, Dan. Trust you're well, my friend. Yeah, Dan says, or you could use a third-party website like Car Gurus. Hey, Drive for Diabetes Awareness is here. Good to see you. Jose Mendez is Tom. Maybe Elon Musk. Andre says, Tom, the average rent is $5,000, so it means average salary for those living in Manhattan is $200,000. So Andre, I think those statistics are a little bit skewed. I think they use the average just to, as a little bit of a clickbait, I think. Because Manhattan is tremendous, right? You have apartments that you could rent for $80,000 a month, and you have apartments that you could rent for $2,000 a month. So as you use the average, the higher numbers tend to skew the lower numbers significantly. So what I usually like to do is use something like a median. However, even the median rent is, I think, above $4,000 now. But one of the things people do in New York, especially if you're just moving here out of college or you have your first job, many people live with roommates. So it's not like each individual person is paying $5,000. I would be interested in looking at a study to see what the average person actually pays in rent. I think it would be more along the lines of $1,500 because many people live with roommates. Hey, John is here. Good to see you, John. Christian Suarez. Hey, Tom. What days do you take off from streaming? I guess it just depends, but sometimes what we do, well, we usually stream 5 days a week between New York City and Miami at about 8:30. So I'm not usually too sure the days we take off. Andre said, so it's bad for families, they won't live with roommates. Yeah. I mean, it's definitely not good what's going on, right? I mean, the rents are getting bid up rather high here. But Andre, I don't think it's exclusive to New York, right? I think you're seeing this across all major cities in the United States where rental prices are really, really taking off. And, as it relates to tonight's live stream, if we look all the way forward to Wednesday, September 21st, okay, we are going to be hearing from the Federal Open Market Committee as they announce their monetary policy decision. And as we covered on one of the live streams last week, the Federal Reserve is very, very interested. Oh, drops here. The Federal Reserve is very, very interested in looking at core inflation as opposed to the headline inflation number. So the headline inflation number includes things like volatile food and energy, but the core inflation is, well, some would argue, is a more realistic representation of what the average American is facing in their everyday lives. So the problem here is that we saw that headline CPI number actually come down a little bit, right? Obviously because crude oil came down quite substantially. But one of the things we did see is that the core CPI number actually went up, and it went up quite significantly on a year-over-year basis and a month-over-month basis. Now, if we think about what constitutes the majority of that CPI reading, it's something that's called shelter costs. So if you look at the breakdown of the CPI, about 33%, I think 32 or 33%, you're gonna have a really nice view of the One World Trade Center here. So about 32 or 33% of the CPI is made up of what you call shelter costs. So that is anything from rent, but also the way they calculate it. We'll wait till the train goes by. But another way that they calculate it is what would the average American be paying in rent, assuming they rented their personal dwelling, right? So let's say you own a home. The way they calculate it is what would you be paying if you were to rent your own personal dwelling? And one of the terminologies that Fed Chairman Jerome Powell always uses is the term called sticky inflation. And the number one thing that we're seeing that's really, really sticky in terms of inflation is shelter costs, and number two, wage pressures or wage gains. And we've reviewed this many times on the stream. I think shelter costs over time are going to come down. Obviously, because if you look back historically, there's a pretty direct correlation between the rise in interest rates. Hold on. Guys, check this out. Empire State Building, One Vanderbilt here. Fantastic view. So historically, there's usually a pretty strong correlation between interest rates going up and real estate prices cooling off. Now, the thing is, when interest rates go up, it's a lot faster for equities or stocks to re-rate, as they call. So usually when rates go up, right? So let's say that 10-year US Treasury yield made 100% move year over year. Equities and stocks, whatever you want to call them, will start to have their repricing first. And that is because equities are a lot more liquid or have more liquidity than housing, okay? But I wouldn't get too upset here, because I think that housing prices and rental prices are going to start to come down. And here's why I think that. And I think it's good to review it again. Obviously, as we understand liquidity, Wall Street traders, banks, and the like could actually re-rate equities much faster because they just apply a simple discount rate. And as interest rates go up, especially as it relates to tech stocks, the future value of those earnings are now worth less today as rates go up. So you have what's called a PE compression, or a PE contraction, price to earnings compression, valuation contraction. But with real estate, you got to list it on the market, you got to show people the house, and it's not as liquid as you could just sell it on an exchange. So what happens is, it sort of happens in a couple steps. And the first thing that'll happen is rates will go up, and these particular homes will sit on the market longer than expected. Now, if you're listing your home for sale on the market and you're like, oh my gosh, my neighbor sold his home in 7 days in 2021, it's taking me 20 days to sell my home, or 30 days to sell my home. Well, your real estate agent, assuming that you work with an agent, is probably going to try to convince you to lower that price so your house isn't sitting on the market for too long, right? So as opposed to in the equities market, those re-rations can happen extremely fast. In real estate, it takes a little bit longer for those interest rates to really start to affect price. And we're just starting to see that happen, which is the good news. So I'll read you a couple of statistics here. That is some good news for our prospective home buyers. Now, in July, homes received an average of 2.8 offers versus 4.5 offers the same time a year ago. So this is exactly what we were just talking about. So the data says that in July, or last month, 2 months ago, homes received an average of 2.8 offers as opposed to 4.5 offers a year ago. Number two, the average home sold last month sold for less than its list price for the first time in 17 months. Okay, let's review that one more time. So the average home sold last month sold for less than its list price for the first time in 17 months. Now, you can, it's 100%. You could draw an absolute 100% correlation between rates and home prices, because if you were to buy a $500,000 piece of property last year, you were getting an interest rate probably about 3%. If you had really, really stellar credit, maybe you could get a little bit of an interest rate, maybe a sub 3%. But now, as of Friday's close, the average 30-year fixed rate mortgage in America trades for about 6.25%, so 6.25%. So that's almost 100% more, right? So that's really, really going to erode purchasing power. So it's going to take a couple quarters here for home prices start to come down. So you're seeing the irrational exuberance being stripped out of the market, which is good. And again, I'll say, I really, really think, if you are a first-time home buyer, or maybe you even want to look into buying a piece of property as a rental or an investment, in Q1 and Q2 of 2023, you are going to be a top dog in this market as it relates to negotiating power and pricing power, especially if you're a buyer. I think you're going to be able to negotiate. I think you're going to be able to get favorable terms. So I would just say sit tight, and good things are coming. Good things are coming, my friends. Hey, we have Jimmy Anderson here. This is Cheers Tom. What's up, Jimmy? Thanks for joining. We are walking over the Williamsburg Bridge. And we have a beautiful view of the Empire State Building, all of Midtown Manhattan, as well as the Chrysler Building and 432 Park Avenue. Hey, Just Barry is here. Says, hey Tom, good to see you. Jumar says, Tom, Fidelity is coining me-flation. Knowing your personal inflation rate affects each person differently, depending on your income, home ownership, etc. I agree with that 100%. Jumar, that is a fantastic, fantastic point, and I agree with that 2,000%, because think about it like this. So to Jumar's point, my inflation rate as a single guy living in New York and Miami, Florida is going to be a lot different than a married couple with 2 kids that has to pay for childcare, daycare, private school, or whatever, right? Food. My inflation rate is going to be a lot lower than theirs. So I think that's that's a really good point, Jomar. Really, really good point. Hey, Kristen Suarez is here. Says, hey Tom, missing New York City. First visit was back in April. Been wanting to go back ever since. Well, please come back. We want you here. Hey, Tess Stickles says, hey Tom. Hey Tess. Welcome. Trust you're well. Buff20 says, hey Tom and Chad, how was the weekend? My weekend was very good. I got a lot done, got a lot of reading done, took it easy. I spent the majority of my time in Brooklyn, New York. But team, we have now made it to the island of Manhattan. Good job. We just walked over the Williamsburg Bridge. Hey, Grand Street 1 says, most people's biggest asset is their home. If the value of their home drops, that is bad news. Yeah, so Grand Street 1, you're absolutely correct. However, I actually like to think about it in a little bit of a different way, and I'll sort of explain my position, but you're 100% correct. Now, I look at it as the overall health. Where do I want the US economy to be in 20 years? Okay. And I think everybody on this live stream, regardless of your political stance, generally speaking, you want everybody to do well, unless you are some sort of a sociopath, right? So I want people to do well. I want people to have upward class mobility in the United States, regardless of your socioeconomic status or whatnot. I want people to be able to come to the United States and have an equal opportunity to succeed and have a shot at upward class mobility. So to your point, if you look at the data, and I forget who did this study, it was either Harvard Business School or it was somebody else, but I forget, and I apologize for that. But the study went something like this. The study says that the vast majority of first generation millionaires in America, meaning you didn't inherit the money, you know, mommy or daddy didn't give it to you. This is first generation millionaires in America that did it themselves. Now, it says that the vast majority of the net worth that makes up first generation millionaires, which means you have a net worth of over $1 million, comes from the equity in your home. So to your point, if home prices come down, and we know the statistic that the vast majority of people's wealth to build wealth in America comes from the equity in your home, well, wouldn't that be a bad thing? Well, it would be a bad thing short term, but it would be an extremely, extremely positive thing for America as a whole for the long term. Because if you look at the statistics, we're starting to have a huge wealth and class divide in the country, where first-time home buyers are having an extremely hard time getting into the market on their own. So what this means is, if you look at the vast majority of people that are first-time home buyers, they're getting help from their parents, they're getting help from their grandparents to get that first down payment. So it's pushing a lot of would-be first-time home buyers out of the market towards renting. And that is not good, because we want people to be owning something, to be building equity in their assets. So as prices come down, and as the Federal Reserve finally lets interest rates normalize, I think this is going to give an even more of an equal opportunity for the vast majority of people to finally be able to acquire a piece of property and then to have a new economic cycle start. So yeah, I agree that it's probably going to be short-term pain. I think you're 100% right. Oh, I think this is the McDonald's that big incident happened the other night. I think some guy went crazy with like a, what did he have, a hatchet? Something like that? Anyway, I think as interest rates are allowed to normalize, more people are going to be able to afford a home, contrary to what many people would say and what you would read in the media. Because the media would say, oh, if interest rates are bottom of the barrel, well then it's going to be easier for people to get a home. Not necessarily, not necessarily. When interest rates are artificially suppressed, it allows for larger players to acquire multiple properties and use a lot of leverage. And this is exactly what we saw during the pandemic when interest rates were near zero. You saw private equity, you even saw some hedge funds getting in here, using a lot of leverage and buying up single family homes for rent. So as the cost of capital is pretty much nothing, sophisticated investors can pretty much get the lion's share of anything. And it makes it very, very hard for the average person to get in the market. So I think as interest rates begin to normalize, I think it'll be very, very short-term pain, maybe 3 to 5 years of pain, but it's going to be an explosive long-term economic growth in my view. Now I could be wrong, but that's just my position. Hey, Gary Carpenter, this is Tom. There was one where the guy's fries were cold and he went nuts. Yeah, I'm not too sure what happened. I briefly saw it on the news. I think some guy went crazy in the McDonald's and he had like a hatchet, I think, and was going crazy. Oh, Buff 20 says it was a hatchet. Man, crazy, crazy, guys. Hey, Dan Zhang, this is Tom. Have you made any adjustments to your portfolio if there's a 100 basis point interest rate hike this week?
Yes.
So, Dan, I'm glad you brought that up. So I have a tweet that I want to share with the group, and I want your thoughts on this. So I came across a Twitter post. Seth says, why did he have a hatchet to start with? I really don't know about anything about the story. I saw a video on Twitter, I think, of somebody busting the glass. I don't think he hurt anybody, to be fair, but I think he damaged the store. But somebody will have to drop the link to what happened. Anyway, so there was a very, very thought-provoking tweet on Twitter by a very reputable and successful hedge fund manager by the name of Mark Minervini. And the tweet goes something like this. If you want to see the tweet, if you follow @WalksWallStreet, I think I retweeted it and put some of my comments on there. So consensus view right now is that on Wednesday, at the conclusion of the FOMC meeting, we're going to get a 75 basis point hike. That's the consensus. However, what Mark Minervini says is if we have that upside potential where Fed Chair Jerome Powell comes out and says, look, inflation's getting out of hand, we got to take this seriously, we're going to do a full 100 basis point rate hike, which would translate to a full percentage point. He actually thinks the markets could take off on that news. Now, that would definitely be a contrarian view, but I actually think I agree with him, because at the end of the day, the Fed needs to establish credibility, because the Fed has lost all credibility. And if you've been watching these live streams for the last year, the moment that the Federal Reserve came out here and said that inflation was going to be transitory, it was nothing to worry about, pretty much myself and everybody on the live stream said that's total BS. Inflation's going to get out of hand. And if they don't start raising interest rates soon, the market is going to lose all credibility in the Fed. So it's very possible that if we have a surprise, well, let me step back. I think futures traders are pricing in about a 30% probability for a 100 basis point rate hike. And I think if we get that, markets are actually going to react rather positively. But what are your thoughts on that? So what is everybody's thoughts if we have a bigger than expected hike? The markets could react positively because that signals to the market that, I don't know what this cop is doing. It signals to the market that the Fed is starting to actually take this seriously now. Hey, Marcelo is here. What's up? Good to see you, Marcelo. FredX, welcome. Buff 20 says he got into an argument. Oh, it was like a fight or something in the McDonald's. Jeep guys, so stock's going to crash more. I think we're probably going to make a third leg lower, which surprisingly would actually be very favorable timing, because if we start to sell off here and we accelerate and we break the lows on the S&P, the NASDAQ, and the Dow Jones Industrial Average, that should take us through midterms, okay? Now, Tom Lee, the CEO of Fundstrat, he has fantastic research. I check him out. They did a research study, and they said that the most favorable political environment for the stock market happens when you have a Democrat as a president, but you also have the Republicans controlling both houses of Congress. Now, again, put this into perspective from your financial standpoint, not necessarily a political point of view. This is the World Trade Center, by the way. And it's very possible that both houses of Congress could flip to the Republicans. And if you look back throughout history, whenever we have a Democrat as a president and the Republicans controlling both houses of Congress, it makes for a very, very, very favorable environment for US equities. And the reason for that is because, generally speaking, the market likes when you have a gridlock in government. The market doesn't like when the government is working together and passing new laws, regulations, and rules. They actually like the government to be quite inept in nature, perhaps. So I think that could conspire. But the number one before all of that stuff, everybody, and you guys know this better than anybody, earnings matter. Earnings trumps all. And as we were looking at some of the major Wall Street investment banks, they are cutting their full year, fiscal year targets for earnings, their EPS, across the board on the S&P 500 by about 18%. So based upon that fact, the S&P right now trades at about 17 times forward earnings, okay, which historically is actually quite cheap. Going back, hold on, let me just cross the street. So this is Elizabeth Street, by the way. We're gonna walk up Mulberry. So historically, if you actually go back in time, whenever the S&P 500 trades usually below 20 times forward earnings, 17 times forward earnings is actually relatively cheap. However, here's where it can get a little bit tricky. That's assuming those earnings stay intact. And this week, as we sort of dive deeper into the markets look ahead live stream, we're going to hear from FedEx. And FedEx actually did sort of pre-announce their earnings and prep the markets for the disastrous quarter that they're going to have. And the CEO of FedEx is actually warning of a major global recession. They said demand is down, consumers are shifting their spending habits from ordering things online via Amazon and all their e-commerce to more experiences. Consumers are spending more on going out and traveling, which is understandable because they locked us down for 2 years for COVID. So if we have more CEOs warning of global recessions, I think the last time that we talked about this, 280 of the companies that reported earnings in the S&P 500 used the terminology recession fears in their earnings reports. Now, the good news is, hold on, you guys will be able to see the beautiful San Gennaro's Feast here. So the good news is this, right? It's not all doom and gloom. I think we need to look at the data. Q2 earnings that just ended were actually very good. Earnings were actually very, very good. And if you listen, and usually during earnings season, which is actually coming up again now very soon, we'll do a deep dive into each company and we will sort of do a deep dive into what the C-suite is saying. And it seemed to me that many C-level executives of Fortune 500 companies were pleasantly surprised at the resiliency of the American consumer. Now, I want to give you guys an interview, and I've already told you this interview before, but if you type !STAN, S-T-A-N, in the chat, it'll drop an interview by Stanley Druckenmiller. And one of the things he says is that American consumers right now roughly have about $2 trillion in wealth reserves set to the side. So it may take a little bit of time for American consumers to work through all of that wealth and cash that is accumulated. And I think that's why Q2 earnings came in much better than expected. Because if American consumers, maybe they're not making as much, but they have cash reserves, they are able to stomach and digest these price increases. And assuming that they're able to stomach the price increases, if we think about why prices are increasing in the first place, it's because big corporations, they're not going to eat those inflationary costs, right? Their job is to pass those costs on to you and me, the consumer. But I think there's going to be a breaking point where consumers will no longer be able to afford those price increases. So this is a little shot of the San Gennaro's feast. But I think there's going to be an inflection point where American consumers like me and you, people watching the chat, are no longer going to be able to afford those price increases, in which case gross margins at these companies are going to have to come down. So if we remember all the way back to the beginning of Q2 earnings season, and I actually wrote about this in the Behind the Street newsletter, one of the things that I said was, what we need to be looking at and paying attention to is if companies within the S&P 500 could maintain their gross margins. So if there's any margin compression there, that means they're having a very difficult time passing on those costs to consumers. And generally speaking, companies' margins actually expanded in Q2. So we'll keep an eye on that. Wow, look at all the garbage here, guys. Sanitation is going to be hard at work tonight. Look at all this, the garbage that is accumulated here. Hey, Kirby is here. What's up, Kirby? Seth is here. Welcome. Michael says, hey, Tom, from Corpus Christi, Texas. How's your night going? What'd you do today? So, Michael, I spent the majority of my day in Brooklyn, New York, between Williamsburg and Greenpoint, Brooklyn. And then I walked over the Williamsburg Bridge to Manhattan. So I trust you had a good weekend as well, my friend, and thank you for being here tonight on the stream. Yeah, War Walkers, like it's a rat's paradise. So true. But to be fair, War Walker, we haven't really seen many rats tonight. Hey, Western Mass Dave is here. What's up, Dave? Good to see you. Excuse me. But if you guys are enjoying tonight's live stream, feel free to leave a like on the video and hit the subscribe button if you're new. We usually go live 5 days a week between New York City and Miami. And we'd love to have you a part of these live streams. Wow, look at all this. At first I thought this was all vegetables, but it's not. It's I think it may be magnets, perhaps. Hey, Road Dog is here. Good to see you, Road Dog. John B says, can you go to the McDonald's that got destroyed by the axe on Friday night? I could not. I cannot. John, we actually just walked past that McDonald's, but I don't want to, I just like to keep my distance and just hang out by myself. I'm not really a big fan of interacting with anybody that has weapons. All right, we should be coming up on the end of the line here any minute now. FedEx is hydrated. I definitely could use a water for sure. I think these are fried Oreos. These look really good. You know, I may have to come here tomorrow. I'll give you guys one more shot and then we will continue on. So Thursday is going to be the big day for earnings on Wall Street. And that is when we hear from Accenture, Costco Foods, and FedEx. Now, FedEx sort of already spoiled the earnings party for us because they pre-announced their earnings and telegraphed just how egregious the earnings report would be. Now, FedEx is going to be cutting about 90,000 store locations. They are going to be limiting Sunday delivery in many parts of the world. And they are also going to be initiating a hiring freeze immediately. And one of the things the CEO said is that they've been seeing a massive shift in consumer behavior. And the funny thing is, we've been talking about the massive shift in consumer behavior for about 6 months. But I think it's really starting to show in fruition, especially a lot of these shipping companies. So not only did FedEx have their largest down day ever, but it also took down a lot of competitors in the space as well. So not only did FedEx stock get rocked, but also UPS and many other publicly traded logistics companies on Wall Street. And one of the things the CEO said is that consumers are shifting their behaviors towards buying things online, on Amazon, ordering in, to shifting to spending on experiences, hotels, airfare, going to conferences, going to concerts, and going to things like this. I mean, it's a Sunday night and I think it's close to 10 o'clock at night and there's still massive amounts of people outside. And I think COVID has essentially built up all of this demand by saying, look, governments across the world forced people to stay home for 2 years. So once the COVID restrictions and the vaccines sort of rolled out, now people are able to go out and enjoy themselves. So they're making up for lost time. And I think that's exactly what we're seeing. So I think that may put a huge dent. Well, it is going to put a huge dent in FedEx earnings. But I also think this will help some specific companies that will benefit from people going out to travel, such as Hilton Hotels and Resorts, and maybe some very select few REITs that we'll talk about in a later stream. Hey, Deborah, it's like it's the Roaring 20s Part 2. Good to see you, Deborah. Let me just cross Houston Street here. So Kirby, the CPI report already came out, and the core CPI was horrible. Yeah, Buff 20 says, Tom, the travel industry is calling it revenge travel. Well, whatever they're calling it, it's definitely real. It is 100% real. Ricardo 305 says, I guess 75 basis points. So now that we have the FOMC meeting coming up on Wednesday, usually the day before the FOMC meeting, we'll take a poll in the chat. So let's do that now. I think it'll be fun. So for all of the Walks in Wall Street viewers, so at the conclusion of the FOMC meeting, which will happen on September 21st, which is this Wednesday, what do we think that Fed Chair Jerome Powell and the Federal Reserve is going to do? What is going to be their decision? Are they going to raise 50 basis points? Are they going to raise 75 basis points? Or Do you think we're going to have a surprise upside of 100 basis points? Now, I'm going to give you my opinion. I think we're going to have a clean 75 basis point rate hike. But what do you guys think? Jeep guy says, Tom, which is better for the stock market, 75 or 100 basis points? So I think for the long term health of the stock market, I think a 100 basis point rate hike would be good. But generally speaking, as interest rates go up, that puts pressure on equity prices, especially very, very high beta growth stocks. Because a lot of these growth stocks and technology stocks, they have earnings not in the present, they have earnings priced in the future. So as interest rates are extremely artificially low, so let's say if the 10-year US Treasury yields at 1%, growth stocks are probably gonna rip. But let's say if that 10-year US Treasury yield is trading at 3.5%, growth stocks are probably gonna have to go through a re-rating to get crushed because the present value of those future earnings are now worth less. And that is why bankers will build those discounted cash flow models and things like that. So let's see what we got here. Western Mass Dave says 75, proceed with moderation. Andy thinks we're gonna get a 75 basis point rate hike. Buff 20 says, Tom, I think 100 basis points because of the CPI report last week. I mean, you may be right. You may be right, Buff 20. John B says, I have no idea. The Fed will do what it wants. Good answer. GN Workstations says 75. So it seems like we're all around that 75 level. GN says, I think 75 basis points, but I do think the Fed will give off dovish hints. Okay. Interesting. Yeah, GN Workstation, I'm not sure if you had joined the live chat yet, but I was going over a tweet by Mark Minervini. Now, I think I've sort of explained who Mark Minervini is many times on the stream. He was featured in the Market Wizards books by Jack Schwager. And he is a very, very smart, very intelligent guy. And one of the things that he tweeted is that it's very possible that the markets could actually react better if the Fed goes big with a 100 basis point rate hike, because they'll be regaining lost credibility, and it'll signal to the market that they're taking inflation more seriously. And it makes sense to me. Now, I don't think we'll get it. I think futures traders right now are pricing in about a 30% probability of a full percentage point, but
I do find when I'm really exhausted.
Sabrina Fair says they want a chance to do another 50 and not shock everybody, so I say 50. Says Sabrina Fair, good guess. I respect it, I love it. SAGA says, I personally have started ordering directly from the manufacturer or second and third party vendors. I've noticed a decrease in overall costs. Says SAG. Hey, Solo 401 is here. What's up, Solo? Thank you for joining. So, SAG, that is very good piece of information. I'm glad you shared that with us. Now, if we think back to the earnings reports of Target, the earnings report of Walmart, and even Home Depot and Lowe's, one of the things that we've been seeing is this trend of inventories building. And to your point, as inventories build, this is why I think we did an entire live stream dedicated to this particular point. So I'll tell you the quick story. So one of my good friends, he works in venture capital, and one of the companies he's working with right now that they invest in is essentially a liquidator firm. So they will go and buy products from Walmart, from Target, Best Buy, or all the big box retailers that have excess inventories, and then they'll resell them to third parties like Home Goods or Marshalls. What's the other one? Is it TJ Maxx? Is that another one? I think TJ Maxx. Anyway, then we'll sell them to them. And that market is booming right now because from COVID, I mean, during COVID was just so bizarre. what we saw is a very, very low supply of inventories, everybody rushing to buy it. So what happened is, due to demand planning, many of the big box retailers actually over-ordered from a lot of their OEMs. And what happened was, a lot of the stuff that they ordered came after the major holidays, came after the summer. So what you saw is patio furniture, outdoor furniture, arriving after the season and not selling, very hard to move. So I think, to your point, in Q1 and Q2 of 2023, I think you're going to be able to get a lot of deals on the third-party market for a lot of electronics, for a lot of kitchen and home appliances. I think those prices are going to come down materially, especially if you're in the market for furniture, outdoor patio furniture and things. I would think that. XV004 says this guy is the epitome of white privilege. All he does is talk about rich people things in his frat boy voice. He probably bullied minorities in high school and college. Appreciate the comment, 004. Thanks so much for being here. Hopefully you had a great day. John B says TJ Maxx, Marshalls, and Home Goods, all owned by the same company. This is John B. Solo 401 is here. Thank you for joining. Nicholas Prasad, good to see you. Deborah S says Alibaba seems far away. So, talking about Alibaba, one of the things that's interesting about that company is they're now trading below their list price. So Alibaba did 100% round trip, and they're actually trading well below their list price. So one of the things this tells me that I'm actually a little bit concerned about is global economic growth is slowing. And I think this is backed up by what the CEO of FedEx said. So if you look at a lot of the zero COVID policy, I would say errors that the Chinese government has been putting in place, it's been really, really putting a stranglehold on their economic growth. And I think that's reflecting in the share prices of those particular companies. Now, once again, to quickly review, if you think about the ramifications, I guess I would say, of some of those policies. Or let me take a step back. If you're going to go on an exchange, right, and buy shares of Alibaba, JD, or anything like that, I think you have to realize you're technically not buying the actual underlying shares of the company. You're buying ADRs, which is American Depository Receipts. So I think it's important to be cognizant of that. And China is now fighting the SEC and vice versa. And many of these Chinese ADRs may be delisted from American exchanges. So if you're buying any of these particular investments, I think it's important to be aware of the risks. Definitely important to be aware of those risks. Hey, Ethan R. Thank you, Ethan. I appreciate it. Guys, big news, positive news here. Right here on the corner of Astor Place, East 8th Street in Lafayette, is going to be a Wegmans. Now, Wegmans is my personal favorite grocery store of all time. They actually opened up a particular store in the Brooklyn Navy Yard. So if you guys have not checked out Wegmans, I would definitely check it out. Wegmans is fantastic. Hey, Deborah says, hey, passing the public theater to your right. I like the high road that you took with that guy. Omar, good to see you. So we are now outside the beautiful 51 Astor Place. And this is the IBM Watson building. Now, IBM Watson, they did sell off their healthcare unit to PwC or PricewaterhouseCoopers. And ours is, what street will the Wegmans be on? So it's going to be on East 8th Street. We'll walk back over, I'll show you. So right as you get off the 6 train here at Astor Place, it's going to be on the corner of East 8th Street and Lafayette, right across, I would say adjacent from the Starbucks. You are going to have the Wegmans right here. So very excited for that. You know, this empty storefront here used to be, what did it used to be? I'm blanking on the name, an H-Mart. No, not an H-Mart. Kmart, excuse me. H-Mart is one of my favorite Asian grocery stores. Ah, yes. Somebody in the chat says, I remember it used to be a Kmart. Yeah, I bought some things in there many times. James Dixon is here. Says good evening. Hey, James, welcome. Marketing videography, that is it. Thank you for reminding me, the Kmart. Yeah, I remember I had to buy a pair of shorts in that Kmart because at the time I belonged to the Blink Fitness here, across the street from that Loch Cologne. But yeah, it's going to be a Wegmans, which I think is going to be very popular for this neighborhood. Hey, Ricardo305 says, we'll watch all your streams before I come. You're doing a really good job. Thank you again. Just want to learn that how many miles you walk in a random day. So that's actually good that you bring that up. I think I posted on my Twitter this week, I believe we averaged right around 11.5 miles a day, which is really good. I mean, that's really, really good cardio. So, and I've noticed a direct correlation between my productivity at work. And we'll go down this way. I've noticed a direct correlation between my productivity at work and when I've started the live streams. Now, you would think, you know, walking for 2.5 hours a night may actually have a negative impact on productivity. It did for about the first 4 months. But as my body started to adapt, it's just been, productivity has taken off like a rocket ship. Energy levels are up, my mood is up, I feel better. So cardio is definitely fantastic. I love it. Oh, Barb Kimber's here. Yeah, Barb, I saw your, I think you sent me an email. Barb says, Tom, I live less than 10 minutes from the DeWitt Wegmans. It's the second largest store in the chain. Pittsford and Rochester is the largest. Yeah, so DeWitt is in upstate New York, very close to Syracuse, New York. And yeah, I think Wegmans actually, now is Wegmans headquartered in Rochester or are they headquartered in Syracuse? I forget. It's either one of the two, but Wegmans is a fantastic grocery store. I'm so glad that they actually opened one here at the Brooklyn Navy Yard, and we're gonna get another one right here in Manhattan. So super excited about that. Brad's Brain says exercise is a must. 1000% agree. Tug Carter says you're one of the best walks of New York on YouTube. Thank you. Thank you, Tug Carter, for saying that. I appreciate the kind words. Oh, Barb says Wegmans is headquartered in Rochester. Yeah, I think I would argue that Wegmans is probably a little bit better than Whole Foods. I think I like it a little bit better than Whole Foods. So this is Grace Church. Beautiful architecture here. Hey, Michelle K is joining us. Good to see you, Michelle. Trust you had a good weekend. So one of the other things I wanted to bring up in this chat tonight, one of the things we always talk about is try to identify emerging trends. Okay, it is very, very important to not try to anticipate trends, but to identify them as they're happening. Now, as it relates to two specific reasons. Number one, obviously as an investment thesis, that's always great. But number two, for career opportunities as well. So oftentimes we'll talk about, you know, lucrative careers in software development, software sales, in investment banking and the like. But I think if you asked me what I think the number one or number two very niche sector in the economy is for explosive growth, it would be cybersecurity. And I've said I always categorize products and services into two specific categories. Number one is must-have products and services, and number two is nice-to-have products and services. However, I think cybersecurity is carving out a very unique third category that we have never seen before, and that is called a requirement. So it's not a must-have, it's not a nice-to-have, it's going to be a requirement. So in addition to the live stream that we did last week, there was a massive cybersecurity attack that hit the Los Angeles County School District, deeming many of their operations out of commission. But in more recent news, on Thursday into Friday, Uber has been hacked and they have been compromised. And Uber, if you think about the people that Uber employs, these are some of the smartest, most educated people from all over the world, making very, very big salaries from some of the top schools. However, a hacker did gain access to their Amazon AWS account, their Google Cloud account, as well as their VMware IT software. Now, got in there. I would like you guys to think back to our live stream where we went over zero trust architecture. So I'll quickly review that before we go on. Now, back in the day, if we think about traditional wide area networks or WANs, how did we secure those back in the day? Something that's called, well, traditionally those networks were called hub and spoke, right? Very basic hub and spoke networks. And in order to secure those hub and spoke networks, what you needed to do is throw up a firewall, right? And say anything on the outside of this firewall is a danger to our networks. However, anything on the inside is perfect. It is safe. It is good to go. We have nothing to worry about. Now that worked in a very data center centric world. But now that we've had this huge push towards cloud computing, toward public clouds, the traditional sort of moat and, sort of cybersecurity, castle and moat, if you will, as they call it, where you just throw up a firewall and say, hey, anything on the inside of our network is safe and anything on the outside of the firewall is deemed dangerous, doesn't work. Because now you have public clouds, you have SaaS, software as a service, and in public clouds you have Amazon AWS, you have Microsoft Azure, you have Google's Google Cloud. So many of your employees are not only accessing your specific applications on-prem, they're accessing them in the cloud. So traditionally, in order to access that, or to give remote workers access, you had to provide them with a VPN or a virtual private network, which would then extend that security to your end user. Now, it's funny because a hacker was actually able to trick one of the employees at Uber to give them access to their VPN. So I would like to say this. Do you think that the result of this hack, the C-suite at Uber is going to say, okay, for our budget for fiscal year 2023, we are going to decrease spending on cybersecurity software? Or do you think that Uber is going to say, okay, we need to do a total rip and replace. We need to look at zero trust architecture vendors like Palo Alto Networks or Zscaler, so something like this never happens again? I would say the latter. And the point is, ooh, look at this. Beautiful view of the Empire State Building here. So one of the things that, Martin Van Buren, just chill out. So one of the things that I'm trying to make a point here is that I believe the total addressable market for cybersecurity solutions is going to expand. And one of the things that I always say on the stream is that, there's always a bull market somewhere. You just need to know where to look. And unfortunately, right now, there's a bull market in cybercrime. So ways that we can combat that, and organizations, not only from public and private companies, but state and local governments, education systems, the way they can do to combat those crimes is to invest into cybersecurity software. So from an investment standpoint, I would be looking at the cybersecurity space, but also from a career standpoint, I would be looking at the top cybersecurity companies as well, because there's going to be more attacks and hacks, unfortunately, as the years go on. Deborah says, Tom, Uber needs to anonymously test their employees on cyber attacks, the least clearly, or at least clearly more than they are. Yeah, and I mean, it's definitely tough, right? It's not, one of the ways that hackers have been able to gain access into corporate networks is by emotet attacks and phishing emails, right? So the email may look like it's coming from, you know, your boss or something like that. But the problem is, though that specific attachment or that specific PDF file could actually contain malicious software that could be used as some sort of a ransomware attack. So it's definitely not good. Hey, Neil Bell is here. Hey, Neil, good to see you. Says it's interesting the way you describe cybersecurity. It's like things are now having to evolve to be more like human immune systems. Yeah, it's crazy. Much more intelligent, tailor-made, and multi-layered. I would definitely agree with you, Neil, especially as technology changes. We need to change the way we look at cybersecurity. Because if you think about it, I generally tend to agree that
This world is a piece of shit.
generally tend to agree that corporations are going to adopt and take a very strong stance on remote work. And if you want your employees to access your internal applications remotely, you're going to need a safe way to distribute those applications to your employees and make sure they're safe. And that is why I'm very bullish on zero trust cybersecurity. Has anybody noticed, it seems as if both some people in the chat and on the streets in New York, seems like everybody's very upset today. I'm not sure why. I'm having a great day. And I think next week I'm gonna have an even better week. But it seems like, I don't know, maybe some people are not right with themselves this week or tonight, which I hope changes. I hope everybody feels better. Hey, Dirk says, Tom, what do you think of Gartner and their industry insights? Does that type of research help IT people? Yeah, for sure. 100%. I think it's very important for those sort of data analytics companies to provide insights. I think it helps management make decisions. I would say, yeah. Hey, Mike Anton is here. What's up, Mike? Oh, Richard 305. So I know that unfortunately, there's a really bad hurricane right now that's hitting, I think, what is it, Fiona? That's hitting Puerto Rico. And I think the entire island of Puerto Rico is without power. It's horrible. So heart goes out to everybody in Puerto Rico. Hopefully it doesn't make land here in the United States. But after all, I guess it is hurricane season. So hopefully the power will be back on in Puerto Rico ASAP. Hey, Fred X, what's up, man? Vonda Howard, good to see you. Trust you well. Bit of Wander is here. Good to see you, Bit of Wander. No, Brad's brain, not you. I'm talking about the... there were some people that were putting crazy stuff in the chat. Not you guys, just some people. And some people saying things to me on the street. Hey Leonardo says, hey Tom, I'm a cybersecurity guy in Brazil and I've come to your country on YouTube because I'm planning a trip to New York. And you're doing a live stream talking about this on the New York City streets. Hey, awesome, man. Well, I'm excited for you to come to New York. I think you'll have a great time. Yeah, FredEx says Japan got hammered by a typhoon as well. Yeah, hopefully we won't have any major storms this season. Pixelogic is here. Says hello, Tom from Long Island. Welcome. Van is here. Says Tom, you will be in Miami during the hurricane. Well, I don't know if the hurricane is going to make landfall or not in Miami. Now, I was looking at the Weather Channel today, and what it says is... Hold on, we got to get out of here, man. I was watching the Weather Channel, and what it said was the storm is supposed to... Obviously, right now, I think it's right over Puerto Rico now, but it's supposed to curl off and miss the east coast of the United States, but it's supposed to bring crazy amount of riptides and currents to the east coast. So all next week, if you're at the beach or something like that, they're warning about extreme undertows and riptides. But I don't think we're actually gonna get the hurricane, thank God. Hey, Bernie Williams is here. Says, hey Tom, I'm late. Had some stuff to do, but I'm around. Good to see you, Bernie Williams, and I hope you had a fantastic weekend. Lockjaw's here, good to see you. Ricardo 305 says, Tom, don't be afraid of the hurricane. We shouldn't have a problem. Copy that. Ooh, I'm gonna cross the street. I'll show you guys the Empire State Building. But if you guys are enjoying the live stream so far, feel free to hit the like button and subscribe to the channel if you are new. We usually go live about 5 days a week between New York City and Miami at 8:30 p.m. Eastern. And we'd love for you guys to be along for the ride. But right now we are coming up on East 22nd Street and Broadway. And we have a very, very clear view of the Empire State Building tonight. Looks fantastic. Yeah, Gregory's like, nice to see the Empire State Building. Good to see you, Gregory. Happy Sunday night, my friend. Hopefully you're ready for the week ahead. I think if I point the camera a little bit down, I think this is a solid 9.6. I think this is a solid 9.6. Hey, Michael is here. Says, how is the crime activity on the streets in New York City? Looking good. Hey, Jeep guys, says, why so much scaffolding over the sidewalks? Does stuff just fall off the buildings? Well, it's a little bit crazy here in New York because of the way the laws work. And essentially the owner of these buildings, let's say if they have a violation or something like that, they have an option. They could either repair the building, right? Or if they put scaffolding up, they can delay the repairs. So oftentimes it's much more cheaper just to leave the scaffolding up in perpetuity than to actually repair the buildings. So many of the building owners, landlords will do that. But guys, check this out. Right here, you can see the very top of the Chrysler building. It's fantastic. Ooh, Brad's brain's like, sorry, Tom, but you're way off, maybe an 8.5. Yeah, maybe as we get closer to the Empire, the score will go up. But the building to the left of us is actually very famous. And the building, without all the scaffolding, looks like this. And it is the Flatiron Building. But I believe it is under construction, and it will stay under construction for some time. And I can't wait till the scaffolding is down because that building looks absolutely beautiful. Hey, Iron Chain 123, good to see you. This is all right, gotta work tomorrow. Thanks for another great stream. Hey, thank you so much, man. I appreciate the kind words and wishing you the best for the week ahead. Hit the ground running strong. Neil Bell. Will says, Tom, any advice on starting a financial blog? Like you want to write about finances? The advice is just get started, dude. Start typing away, start hammering away. That's really it. I mean, all good things come to things that are in motion, right? You just got to get the ball in motion. And I would say just start doing one little thing a day, right? Just as long as you are moving the theoretical football down the field. It doesn't have to be 10 yards, 20 yards, 30 yards, or even a Hail Mary pass. It could be like a half a yard. Just continue to make some sort of little progress every day. You know, and that little progress at first could be just opening up your laptop and writing one sentence. And then the next day you come back, you open up the laptop, you write 2 sentences, then 3, then 4, then 5, then 6. You know, all good things happen over very, very long durations of time with consistency. So just as long as you continue to hammer on the project every day, in perpetuity forever, you'll be good. You'll be good, my friend. So now we are outside of 10 Madison Square West, and there's a beautiful Tesla. Let me see what model this is. I think this is the model with the gull wing doors. What is that, the Model Y? Hey, Dirk says, Tom, I have a trip to New York City planned for February of 2022. Can't wait to walk and practice streaming. Hey, Dirk, awesome, dude. Hope you have a fantastic time in New York. So Will and everybody in the chat, I'll recommend, oh, it's a Model X GTF Frontier. This is a Model X, copy that. So I've recommended this book to people before, but I'll recommend it again. And it's really helped me out. Obviously, you guys know I have a career in tech sales, software sales, whatever you want to call it. But the book is called Atomic Habits by James Clear. Now, I think this book is so critically important to read that you should probably read it once a quarter. Because I think and this could be success in anything. Maybe you want to be a better baker. You want to bake better cakes. You want to bake better cupcakes. Maybe you want to be a better investor. Maybe you want to be a better husband or a wife or whatever. Essentially, the theory or the theme of the book is that people make a mistake by focusing on their goals. And you shouldn't focus on your end goal. You should focus on creating a duplicable, if that's a word, replicatable, systematic process that you can do every day in perpetuity forever. So instead of focusing on a goal, focus on building a process or a system that you can work on forever, right? So you wake up and you work on your system. So this is Anita Gelato. This place is always packed. Brian Royals, I want to be a lottery winner. I think we all do. So anyway, if you can develop a system, right? So let's say if you are in sales and you're a new person, you just got a job at a software company or wherever you're selling. If you can say, I've never cold called somebody before. I've never sent an email. I'm very nervous and I'm very introverted, so I'm probably going to fail at this. Well, what you should do is start out, buy a journal at Walmart or wherever, spend $5, and in that journal, write out everything that you need to do every day to show incremental progress. And that could be as basic as my first day on the job, I'm gonna pick up the phone, I'm gonna make one call. It doesn't matter if the guy picks up the phone or not on the other end. I'm just gonna make one call, I'm gonna hang up, I'm gonna go home. And the next day, I'm gonna pick up the phone, I'm gonna make 2 calls. Doesn't matter what the outcome is, I'm gonna hang up the phone and go home. And then on and on and on. And before you know it, you're gonna be going into work and you're gonna be making 150 calls a day. You're gonna be setting appointments, you're gonna be running those appointments, and it's gonna compound so fast that you're not even gonna freaking know it hit you. And the problem is people sort of give up before they really work the process. So if you wanna start anything, you really gotta give it a commitment of about 6 or 7 months. You gotta say, okay, I really wanna excel in this. I wanna learn a new coding language. I want to, whatever it is, right? Insert for X, whatever that is you wanna do. I wanna get really good at this. I'm gonna allocate 7 months of my life, because you're not gonna get any material results within the first 5 months. It's gonna take longer than that. But once you start to hit month 6 and month 7 and month 8, it's gonna start to compound and it's going to be really eye-opening. So that's sort of what I would recommend. We're about to see a phenomenal view of the Empire here. Wow, guys, look at this. This is a killer view of the Empire. Hey, Golden's Dawn, says Baker here, Tom. Made cupcakes for my grandmother's 89th birthday. Love that. Love that, Golden's Dawn. CR says, hey, Tom, g'day, mate. How do you go about planning your route and everything? So for the streams, we sort of just start off at my office and I just commute back to Penn Station. I don't really plan too much, just sort of turn on the camera and just go for it. Yeah, Brad's brain says that's the 10 out of 10 shot. Yeah, I think what makes it a 10 out of 10, Brad, is this building here. I love the very stark white amongst the Empire State Building in the background. I think it makes it really pop. Two Barnacles says, if you call me trying to sell, I will tell you to put me on the do not call list. And you know what I would do? I would say, sure. And I would put you on the do not call list and I would continue about my day. Okay, this is probably like a 9-9 here. And I think that was actually a very good comment, because if anybody's trying to get into sales, the reason why generally salespeople get a very bad reputation is because the salespeople who are very high pressure, those are the people that do not have a very full and very big pipeline. Because if you have to resort to hammering and harassing a person in order to get them to buy, well, then you're not doing your job properly, right? As a salesperson, especially as you get into tech sales is more technical, right? Tech sales is almost not like traditional sales. I mean, you have to have some sort of a technical ability to help your customer build this architecture. But anyway, what you want to do, the job of a salesperson is not to try to convince somebody to buy your product, okay? You need to think bigger than that. I mean, this global economy is absolutely freaking massive. What you're trying to identify are customers and organizations right now that want your product already, but it may not be in the budget this quarter. They may not know how to implement it, or they're just sort of thinking about it, right? And the economy is so massive that there's people out there every day that are either looking to buy a product or a service that you have to offer, or it's in the budget. The C-suite has talked about it, but they just don't yet know how to implement that, and either they just don't even have it in the budget. Those are the people that you're trying to identify. You're not trying to convince somebody that picks up the phone and says, hey, you know, we just don't have a need for it. It's just not, we just don't need it. Like, the guy told you he doesn't need it, okay? the people, if you get somebody on the phone and they say, yeah, you know, call us back next quarter. I know we should implement, you know, something like this, but it's just not in the budget. We need to hire more people. Like, that's the target, okay? Because as you get into tech sales, you're more of a solutions-oriented sale, where you can come in as the consultant, and maybe they don't have the money to hire an IT guy. So maybe you can use your internal resources, like a solutions engineer or a solutions architect, to say, hey, we understand that you don't have extra $70,000 in the budget to hire another IT guy to, you know, manage your cybersecurity infrastructure, but do you have about half that in the budget to outsource it to somebody else, right? And then you sort of start the conversation. You never want to hammer somebody that already told you they don't want it. They don't want it. That's like the biggest rookie mistake in sales. And I mean, it could even get bad. I would even argue that it's pretty unethical. If somebody just respectfully asks you to, no, I'm not interested, I'm not in the market for it, and you keep calling them, that's like borderline harassing the guy or the girl, so. Oh yeah, that's right. It was the Giants' first home game today. I totally forgot about that. Did the Giants win tonight? Or today? SAG Ace, by the way, Giants won today. Beat the Panthers 19-16. Nice. I'm not a big football guy, but if I had to root for somebody, I mean, obviously it'd probably be the Giants. Now, I know, what is there, 3 professional football teams in New York? The Giants, the Jets, and the Buffalo Bills. Hey, photos from around New York this year. Huh?
Stop playing with me right now.
Stop. Yeah, get out of here, man. John, good to see you. Blues writer says Jets didn't win, Cleveland lost. Yeah, football games are a good networking opportunity for clients as well. Hey, Quinn says, good evening, Tom. I've been lurking like I usually do. I always give you the like button, however. Thank you, Quinn. Good to see you. Hopefully you had a great weekend and you're ready to attack the week ahead. Yes, Sam says, be safe, man. Yeah, I've noticed a lot of people are really, really edgy today on the street. I've ran into multiple crazies tonight on the stream. I mean, the Giants won. People should be happy in New York, I guess, right? Hey, Opal says, hey, Tom, when are you going to be back in Miami? So we should be back on Tuesday or Wednesday. Now, here's the thing that I'm a little bit concerned about. There's a major hurricane, unfortunately, that's hitting Puerto Rico right now. So I'm not sure if it's going to make landfall in the United States. If it does, we may be delayed in terms of our flight. But, you know, we'll see. Hopefully not. Hopefully I'll be back safe and sound. All right, so now we are on 34th Street and Herald Square. So a quick review, everybody. Tomorrow, obviously, AutoZone is going to report earnings, and then we are going to have the National Association of Home Builders release its housing market index for September. Many economists on Wall Street are forecasting about a 48.5 reading, and obviously that signals contraction that is below the 50 reading that signals growth. Tuesday, the Census Bureau will release new residential construction statistics for August. Expectations are for a seasonally adjusted rate of about 1.45 million privately owned housing starts for last month. Now, that's actually coming in pretty light. So obviously one of the things that we need in order for home prices to start declining is not only interest rates going up, but it is also supply coming onto the market. Now, I think we are going to get that supply in Q1 or Q2, which we did review on tonight's stream. But I think over the long term, if you look at the data, the United States has been underbuilding for quite some time. And that has been due to a lot of the bureaucracy in, trying to get, a lot of the zoning nonsense, especially here in New York and in California. I think that if we had a little bit more lax policies in relation to zoning, I think we would probably have a lot more homes to be built, or homes built, thus driving down the rents. 20 says Tom, forecast has Fiona going up north towards Bermuda. You may still have a bumpy ride down, that's all. Yeah, I mean, that's what I saw today on the Weather Channel. What they were saying is that even though Fiona may not make landfall in the US, it's going to give off massive, massive wind, as well as potential storm surges too. So we'll have a lot of riptides and the like. Hey, Wendy England, good to see you. Welcome, welcome. But as you guys know, the main topic for next week on Wall Street is the FOMC meeting that will be on Wednesday, September 21st. Consensus on Wall Street is that we will be getting a 75 basis point rate hike. But obviously after that egregious inflation report, where core CPI seems to be a little bit sticky, there is the upside about a 30% probability that we may be getting a 100 basis point rate hike or a full percentage point hike. And then obviously we will end the week from hearing from another major central bank, such as the Bank of Japan. The Bank of Japan is actually taking a complete 180 and doing something completely different than the Federal Reserve, than the ECB. And they are actually still pumping quantitative easing, where they actually have negative interest rate policies. So the Bank of Japan will announce its monetary policy decision at the conclusion of the market close on Thursday. The central bank is expected to maintain its ultra-low interest rate policy and keep its target rate unchanged at negative 0.1%. And it's been that way since early 2016. So when the entire world is going to quantitative tightening, raising interest rates and unwinding that balance sheet, the Bank of Japan is actually doing the polar opposite by continuing quantitative easing, printing a bunch of money. And that is why, if you look at the currency markets or foreign exchange markets, the yen is getting pounded. So I believe, and I'm not sure if anybody has access to a TradingView account right now, but if you look up the Dixie or the dollar yen pair, I think it's reached record lows. Hey, Kerry Pan is here. Says, how are you, Tom? I'm doing fantastic. Yeah, I'm pretty sure the yen is at its lowest level against the dollar since 1998. Hey, Mike C, thank you so much for being here. OI says hello from England. Welcome. Oh, that's right, everybody. I believe it's a bank holiday in the UK tomorrow. Is that correct, for the Queen's funeral? Is that correct? I don't want to be misspeaking here, but I think Mike C may have said that. But tomorrow, I don't think any of the... I think it's a bank holiday in the UK. Is that right? I'm not sure. It may be. So there's probably going to be very light trading volumes across the board tomorrow. Ricardo 305 says the dollar index is at 110, highest level since 1997. Yeah, so the Dixie strength is ridiculous. I mean, the dollar is extremely strong, which has been hammering emerging markets. What I'm saying is that the yen, the Japanese yen, has fallen to the lowest level against the dollar since 1998. And that would make sense because, you know, the Dixie is, what about 1.9, 110? Sammy says, hey Tom, a lot of us are off of work. Good to see you, Sammy. Yeah, John says, I was very upset about the Queen passing. It's definitely sad, but at the end of the day, the way I look at it is, I mean, especially, I mean, if you think about it, anybody that really lives past the age of 90, that's a really, really big blessing. I mean, in and of itself. So she lived a very, very long life. So I think I always try to spin it and reframe things to make it a positive aspect. So my reframe, I'll give you guys my reframe of the Queen's passing. My reframe is, wow, how fantastic is this? We had somebody that had such a long life, that saw so much, that interacted with so many people, and that got the opportunity to live all the way into her late 90s. That is amazing. It's fantastic. That's a pretty good reframe. And it's true. I mean, it's a blessing to be able to live a very, very long life. So that's the good news. So now we are coming against Rays. Wow, Mike C says, I had 2 grandparents make it to 90. Dude, you're lucky. You were lucky, Mike. Billy B says, if Princess Diana was still alive, she would have been queen or something. Yeah, I'm really oblivious as it comes to all that stuff, but hey, Blues Writers here. Good to see you, my friend. Says, yes, Tom, but it took her 85 years. Yeah, good to see you, Blues Writer. Hope you had a good weekend. Blues Writer, are you ready for Fed Week? So today Wednesday, we're gonna hear from the Federal Reserve. You know, also a lot of earnings. Accenture, which is a major tech consulting company, is gonna be reporting earnings. I think they're gonna report a pretty good report. Now, 2 weeks ago, we actually did an entire live stream covering the EY breakup. So what they want to do is separate the consulting business from the auditing business. So we'll be covering that. All right, West 41st Street and Broadway. Yeah, Blues Writer says T-bill's looking pretty interesting. Yep. You know, another thing, we were talking about I-bonds. So I-bonds, obviously you're limited to about $10,000 worth of purchases a year. But I think it may be a little bit different if you have multiple like entities or LLCs or something like that. But I think the yield on them is a little bit under 10%, like 9.87%. I mean, personally, I don't own any I-bonds, but so if you guys look all the way in the center of your screen, you'll see the ball that they drop on New Year's Eve. This is 42nd Street, Times Square. We'll be doing our live stream, maybe in Miami, or maybe, I gotta say, I'll probably be back obviously for the holidays in New York. Austin City Limits is 10 out of 10. Good to see you, Austin. Welcome. So we're making it right here, and check out the One Vanderbilt building. Buff 20 says, hey Tom, how many steps so far? I'm not sure. When I conclude the stream, I'll post it to my Twitter. But I think we probably would do, what, maybe about 7 miles so far? Because we've been streaming for almost 2 hours. So usually maybe 6.5, 7. I gotta look. Well, we started off in Brooklyn, so. So there was a very, very good article that was on the front page of the Wall Street Journal that detailed the very, very, I guess probably the biggest news on Wall Street in relation to M&A. Adobe purchased Figma for $20 billion. Now, obviously, first of all, we need to say a huge congratulations to the team over there at Figma on the $20 billion sale. That's fantastic. A lot of people, his lives changed from this deal, and that puts a smile on my face. Now, if you want to learn a little bit more about the deal, about the CEO, about how the company actually came about, read the cover story in today's Wall Street Journal, and it is like the stereotypical American success story. And I love reading about things like that, because one of the things I always like to reiterate on the streams is that it's very, very seldom is it appropriate to make a long-term bearish bet on the United States. And the reason for that is because we live in a capitalistic society where we set the expectation to the rest of the world where if you want to come to America, doesn't matter where you're from, doesn't matter what your background is, doesn't matter what religion you are, whatever. If you want to come to America and work hard and build a new product or a service, you have an equal opportunity to get rich and enrich the lives of the people around you. And Figma is another entrepreneurial Silicon Valley success story. So if you guys are interested in learning a little bit more about that acquisition and just how the company came about, please check it out. It's definitely it'll be definitely a big motivation for everybody to start the week. Yeah, Blues Riders is a very nice shot. I'm gonna actually walk over here to the corner of West 43rd. You guys are actually gonna see a better shot of the Empire State Building. It's a beautiful night in the city. It's not too hot, not too humid, and we are standing right outside of the Bank of America Tower here. Man, that's a really, really nice shot of the Empire. Check that out. Hey, Andy is here. Good to see you, Andy, from South Korea. So Andy, it's already Monday for you guys. Good to see you, Andy. War Walkers is so true, Tomcat. Good to see you, War Walker. Hey, Vincent, it seems like New York City is picking up. What do you think of the safety of the streets? The safety of the streets is fine. There was a lot of nut jobs today. But I think it's just because everybody's winding down from the weekend. But no, the city was beautiful today. I had a great day. I was actually spent most of the day in Brooklyn. I was in Greenpoint, which is one of my favorite neighborhoods in Brooklyn. Used to live there. Oh, before I forget, everybody, I wrote down a couple of interesting statistics that I wanted to read to the team here. But before we do that, we're coming up on 45th Street and 6th Avenue, or Avenue of the Americas, where quantitative hedge fund D.E. Shaw is located. And obviously we got that big breaking news that FedEx is going to have an abysmal earnings report, and they are cutting all of their fiscal year forward guidance. And they're not providing any guidance. And that doesn't make D.E. Shaw too happy, because D.E. Shaw is an activist investor in FedEx, and they think that they should start to run their company a little bit more like UPS, increase those operational efficiencies, trim a lot of the fat in the organization. But more on that later. So we've always been speculating what has been the job impact as it relates to COVID? How many jobs or how many people that were impacted by COVID, are now no longer able to join the workforce or re-enter the workforce? And we actually have that number now, and this actually comes from Barron's. So 500,000 is the reduction in the United States workforce because of illness caused by COVID. Now, don't get too political about this. I know everybody has their differing opinions. But the reason why I wanted to bring this up, because one of the main components of the CPI, right, or one of the most important, I should say, of the core CPI is wage pressures. And Fed Chairman Jerome Powell does not want to see wage pressures continue to increase. But unfortunately, last week when we got the CPI out, we saw just that. We saw wage pressures continue to increase because that labor force participation rate is still relatively low and unemployment is still relatively low. So if we think about what that means, we try to conceptualize that. Well, if you have a very small talent pool in order to recruit from, the employees have more bargaining power to negotiate higher salaries. So 500,000 is the reduction in the US workforce because of illnesses caused by COVID. I guess you can call that long COVID. 18th. Here's another interesting statistic for you all. 18th is where the United States ranked globally in a survey that gauges retirement security that is down from one spot from last year. Now, I'm going to ask the chat, and I think this is going to be a fun little guessing game. Which country ranks number one for retirement security? If you had to guess, the United States ranks 18th for retirement security, so individuals that are looking to retire. What do we think, which country do we think holds the number one spot in relation to retirement security, if you had to guess? Mike C says Sweden, Jeep Guy says Japan, no. Deborah says Portugal, interesting, no. Wow, Carson, 100%, man. Yeah, Carson, next time you're in New York City, I'll buy you a steak. Carson hit the nail on the head, it's Norway. So Norway ranks number one in retirement security. And that's actually pretty believable, I'd believe that. A lot of good guesses. Aaron says Finland. Finland's a good guess, but no. Finland's up there, but it is Norway. RS is Switzerland. Switzerland is probably up there too, but yeah, Ryan Royal's like probably one of the Scandinavian countries. But yeah, Carson nailed it, man. Okay, and lastly, okay, maybe I won't read this one. I'll let you guys guess. Yeah, Roy S is drink for Carson. Yeah, next time Carson's in New York, we'll go to either Peter Luger's or this steakhouse up here. Yeah, Zozo Bob, that's true. That's true. Okay, who can guess what the median, because we're coming to the end of the stream here. We got a lot done, so I think we could have some fun. What is the median U.S. household income in 2021? Does anybody know? We just got the results. So who can guess the median household income in the United States in 2021? Anybody want to take a guess? And this is for a steak. This is big stuff. This is big stuff here. Okay, somebody said 41,000. Nope, not 41,000. Sabrina Ferris is 68. World says 25. Silva says 75K or 70K. Zozo Bob says 65. Nope. Nope, not 55. Western Mass Dave, close. All right, I'll give you guys a couple more seconds. Ooh, Roy S, you're right there, man. You're right there. RS is 79,000. Guys, you are so close. It's literally one off. Okay, Dr. Longest was a couple $100 off. Billy's the first one that got it, 71K. $71,000 is the median household income in the United States. So Billy, you're correct. So Billy and Carson, next time you guys are in New York, let's link up, let's hit Peter Luger's, or we could go right here, which is Del Frisco's. So if you look all the way across the street, this is Del Frisco's Steakhouse. This place is pretty good too. But good guesses, guys, good guesses. All right, team, that was fun. But check out how beautiful the fountain is tonight. We are standing across the street from Radio City Music Hall. Ryan Royal says, I love these trivia questions. Mike C says, I wonder how many single income families make 71K. Sonia C says, Tom, ask a question a teacher would know. I want a steak too. Yeah, I think if I continue with these trivia questions, you guys are gonna bankrupt me. I'm gonna be buying so many steaks. Austin City Limits, thank you so much. I think we're at 10% battery. All right, so aside from the financial talk tonight, if anybody wants very, very good halal food, you gotta come to this cart right here. This is Adele's famous halal, and it is right outside of Radio City Music Hall, and it is by far the best halal food in the city. Sabrina Fair, we'll link up, we'll do it. All right, I'll leave you guys off with two, because we covered the real estate market, but I know a lot of people are concerned that they may never be able to afford to buy a home, and a lot of people are very upset, which I understand, but the housing market is gonna cool down. And we're gonna get another 75 basis point interest rate hike this week, which means that 10-year US Treasury yield is probably gonna continue to go up, which means that the 30-year fixed rate mortgage is also going to continue to go up. So I think in Q1 and Q2 of 2023, single family home prices are gonna come down. So I'll leave you guys off with this. And this is the best piece of advice I have ever gotten in my life as it relates to real estate. Okay, and I'll preface this by saying this. Once the pandemic happened, everybody started to go in a FOMO, fear of missing out frenzy of buying real estate. Sometimes offering hundreds of thousands of dollars over asking price, waiving necessary inspections, and they're gonna get themselves into a lot of hot water here, okay? And generally speaking, for the vast majority of people, including myself, your home or a piece of real estate is probably the single largest purchase you will ever make in your life. So the margin of error here is very, very important to pay attention to, and here's what I mean. So this is what one of my friends told me, and this guy owns probably over 350 units or 350 doors. And he said, there's always gonna be a house on every street corner in America. So never rush to keep up with the Joneses to overpay, because if you're looking at a $500,000 piece of property and you make just a 4% mistake. Now, a 4% mistake may not seem like a lot. I made a mistake, 4%. Well, 4% of $500,000 is a $20,000 mistake, okay? So don't feel the need to purchase a property just because your sister did or your friends from college did, okay? Because that's how people make those 5 and 10% mistakes. And all of the money in real estate is made at the buy. So if you make a 4% mistake on a $500,000 piece of property, you're in the whole 20 grand, okay? So keep things into perspective. Interest rates are going to go up. The housing market is going to cool. And check out this piece of data just to put you guys more at ease. And it reads like this. It says, in July, homes received an average of 2.8 offers versus 4.5 offers this time last year. So the housing market is cooling. And the average home sold for less than its list price for the first time in 17 months. Okay, I'll say that again. In 2021, if we were having this conversation, many people were paying over asking and bidding each other hundreds of thousands of dollars over ask. Now, for the first time in 17 months, the average home is selling for less than its list price. So don't make a 5% mistake. Keep your head, invest wisely, and don't invest because of your friend you think is getting ahead of you in life. Focus on yourself and you'll be all right. So team, I do have to go. I want to thank you all so much for joining me tonight on this Markets Look Ahead live stream. I hope everybody has a fantastic week ahead. Okay, take this next few hours of your Sunday to mentally prepare to get yourself in the situation and in the mental mood to attack the week ahead on Monday. Because you guys are winners, and we're gonna see you right back here tomorrow at 8:30 p.m. Eastern Time, live from New York City. So if you're new here, feel free to leave a like on the video, subscribe to the channel. If you are new, we go live about 5 days a week between New York City and Miami. So Billy, thank you so much, my friend. Gregory, FredX, Andy, Western Mass Dave, Deborah, Lena Sandoval, Austin City Limits, Wendy England, Sabrina Fair, Robert, Lydia Durk, thank you so much. All of our moderators, thank you, thank you, thank you. Bernie Williams, Carson, I appreciate you. Deborah, NMB045, all of my friends, War Walker, and to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look, keep a positive outlook on life, and get ready to attack the week starting Monday. See you guys tomorrow. Like, subscribe if you're new. See you on the other side.